There are several trends taking place across EMEA when it comes to trading and post-trade workflows. While access to liquidity with the right trading paradigms remains paramount, the market has fragmented into more venues, which translates into more complexity when it comes to post-trade. Electronification is playing a big role. The days where the industry could rely on manual post-trade processes are coming to an end. There are so many operational and reputational risks to be managed, especially in a highly regulated environment. Transparency is at the very heart of regulatory changes, and to achieve a more robust market, traceability of trading activity becomes key. With all those trends in mind, adopting standards and adapting to new technology is the only way forward. Alongside rules and regulations, we cannot neglect ethics and conduct. On this note, we have seen an increase in the adoption of industry codes of conduct, like the FX Global Code. The code's 75 principles do a great job of providing best practice guidance across all post-trade related workflows and activities. Regulatory pressure has definitely reshaped trading workflows since the big financial crisis, with new directives and regulations becoming a type of post-traumatic remedy after the shock to protect the market from a new black swan event. Looking at the full architecture of those requirements on market participants, transparency is the real ambition of all financial market regulations. A less opaque and a more transparent market is definitely a better place to be. Now, such demand for traceability of trading activity translates into more fields to be stored, archived, and analyzed. In the current complex and fragmented trading scenario, adoption of industry standards and simplification of infrastructures are key. This kind of simplification process in post-trade becomes crucial to achieve operational resilience and contain costs, as regulations consume more budget, but resources are not unlimited. We are not expecting to see an increase in terms of new additional regulations like what we have seen in the last 5 years. Nevertheless, we can expect more scrutiny on the existing ones and initiatives to be kicked off to improve, streamline, and evolve some obligations. There are many fields to be managed, archived, and reported in pre- and post-trade obligation workflows. MiFID II definitely had an impact on its relevant jurisdictions, but also set the bar for other countries and jurisdictions. And MiFID II has some extraterritorial components that cannot be neglected. At the same time, the rising adoption and continuous debate on FX Global Code and other industry codes of conduct reminds us of the relevance of ethics and how these can reach all market participants beyond jurisdictions. Furthermore, in the UK, the senior manager regime emphasized the importance of codes of conduct. All in all, it is the combination of rules and ethics that can make this market safer and reshape workflows in trading and in post-trade workflows. Post-trade workflows and architectures have evolved and have done so in sync with the drivers of regulation and market electronification and fragmentation. On one side, layer after layer, venue after venue, across headquarters and branches, the infrastructure grew and, while working pretty well, became complex and mostly based on deployed solutions. Exactly to reduce that layering of hardware and software, and also to reduce costs in the medium term, many market participants are now targeting fully hosted solutions to empower almost zero IT footprint solutions to drive down costs, reduce operational risks, and allow easy remote working for post-trade workflows. Similarly, the need to deal with regulation is driving adoption of global market standards like FIX to replace proprietary ones who may become simply not good enough at some point. And the wide-ranging drive for simplification is underway in order to streamline processes in the medium to long term, especially now as COVID-19 exposed gaps in business continuity plans due to technological limitations. Senior managers must rethink their post-trade models, looking to solutions that consolidate heavily fragmented and complex workflows into something simpler, more sustainable, and more cost-effective, without compromising on security and operations. We cover all of the trends we are seeing in the post-trade space and highlight the challenges and solutions in Refinitive's new post-trade and e-communications report, which is now available for download.